Hi, I'm Jeffrey Roach, Chief Economist for LPL Financial, with three key talking points for the current macro landscape. First one is this: the Takaichi trade will likely weaken the yen. Japan's snap election was delivered a political earthquake, with Prime Minister Takaichi and her party scoring a sweeping landslide victory, reaching a supermajority with coalition partners. Investors immediately revived the so-called Takaichi trade, which is the expectations of looser policy, heavier fiscal spending, and a weaker yen. The supermajority gives Takaichi ample room to push through big spending plans, which tends to pressure the yen further, at least in the near term. In short, the election result has reinforced a bias toward yen weakness, with markets betting that more stimulus and pro-growth measures are coming. Second, nominee Kevin Warsh could shake up the Fed. Kevin Warsh's recent remarks paint a picture of a Fed veteran who's independent-minded, deeply committed to central bank independence, and skeptical of conventional monetary tools that he calls fast food. With experiences with former Fed Chair Ben Bernanke's link to Wall Street during those crisis years, he's seen as thoughtful and far from a yes man, which should make confirmation smooth. The 2025 speech suggests he's ready to challenge popular frameworks like forward guidance and data dependency. That's an approach that could unsettle some investors, while FX markets may welcome his clear stance on fiscal policy. Overall, Warsh looks like a steady, forthright pick who's willing to rethink old assumptions and signal a shift in how the policy framework might evolve under new leadership. Third, inflation expectations are down to pre-Liberation Day levels. Well, inflation expectations have basically shaken off the shock from April 2nd tariff news, and consumers are feeling noticeably better as University of Michigan's measure of sentiment improves for the third straight month, helped by rising assets and the ongoing wealth effect. Median one-year inflation expectations have dropped to 3.5%. That's the lowest since early 2025, while people say their finances look healthier thanks to stronger markets. Now, home buying attitudes are still stuck in neutral because affordability remains a problem. But more consumers now think it's a good time to buy household items, big-ticketed items, signaling steady spending ahead. Overall, shoppers seem to have moved past tariff worries. The K-shaped economy is still shaping financial outlooks, and real growth is on track to reach roughly 2.7% this quarter. Well, that's all for now. If you want more insights on global market trends, follow us on social media, and take care.